We go opening trade. It looks like we are going to see probably a negative open at the get-go here in Europe this morning. That is what you're already seeing. As you can see, red on the screen. The FTSE 100 expected to open down by maybe 0.6%. We're already ticking towards that. The CAC 40, I think, is probably the most interesting trade this morning. How does the luxury story get priced in? That is where you may see the biggest effect, despite the fact that actually the two stocks in focus are Swiss and UK stocks with Swatch and Burberry. But nevertheless, the epicenter of the luxury story in Europe is the CAC 40. So the CAC 40 opening down by, as you can see, 0.5%. That feels like it maybe is the luxury trade. Elsewhere, we're down by 0.3%. But as Tom and Anna have both been pointing out, China a factor this morning, the Trump trade a factor this morning. All of that needs to be priced in. Plus, we've got to close the gap with the United States in the Friday session, Anna.
Yeah, absolutely. And all of those things add up to all sectors in Europe in negative territory. So we have everything from healthcare, which is the most resilient, down to consumer products and services. And a deeper dive into consumer products and services tells us where that weakness in Paris is certainly coming from. You're right, Guy, very much about the luxury space, and Kering down by 4%, just over 4%. So read across, of course, from Burberry and the difficulties they're having in turning their business around over in China. That has the potential to ripple through then, Tom, the whole luxury sector, because we certainly saw in those China retail sales data nothing positive really about the Chinese retail experience.
70% of household income in China is linked to real estate and property prices just continue to fall in the Chinese market. The attempts in May to push through a significant package to support the real estate sector has yet to be effective. Big, important meeting politically, of course, in China this week, so we keep across that in terms of any policy that comes through. I'm not seeing a print, guys, yet on Burberry. Correct me if I'm wrong, and if you'll say anything, but Burberry, of course, in terms of suspending the yield, the dividend, I should say, and then the change at the top of that company as they try and attempt to restructure and readjust to that weaker demand out of China is quite pronounced. Also looking at healthcare, Anna, you touched on this, one of the more resilient sectors, even as you see a little bit of pressure coming down. It's currently flat, so it's at the top of the list. Hasn't turned green yet. Maybe it will do, but it's facing the least pressure so far in the session. We talked about the fact that maybe there's an expectation that if you get a Trump presidency in November, they will go with a lighter touch in terms of regulation.
Other luxury stocks joining Kering then in negative territory. Still, as you say, Tom, don't have an opening price on Burberry or on Swatch. Both of those could move to the downside, but we see Richemont down by 2.3%, Moncler down by 2%, LVMH down by 1.6%, Hermes 1.4% weaker. So some read across to varying degrees, it would seem, from that Burberry story.
I'm trying to figure out why Ocado is down by as much as it is. Ocado's been halted this morning, limit down, halted for volatility. We'll figure that one out and come back to you, give you an idea of what is happening there. But yeah, the luxury story, the China story, absolutely front and center in European markets this morning, which in some ways is not what you'd have expected first thing this morning, when we would have thought that actually the biggest story in financial markets this morning would have been the attempted assassination of Donald Trump over this weekend. But markets in some ways shrugging their shoulders. This is just confirmation, maybe, the confirmation is the wrong way of putting it. This just keeps the story, the narrative alive that Trump is in front, and this is only going to push that further forward. So Donald Trump now arriving in Milwaukee. He's got the Republican National Convention a little bit later on. Heightened security, obviously, after what we saw this weekend, and that an attempted assassination of the former president, potentially future president in the United States. Let's get more on how we should be thinking about this Monday morning. Bloomberg's Brussels bureau chief, Kevin Whitelaw, joins us. Kevin, the financial markets are looking at this and saying, this just confirms what we already knew. We knew that Donald Trump was in front. This is only going to push his candidacy further forward. How do you think European governments are looking at the changed political narrative this morning?
Well, I think for a lot of folks in Europe, it's another sign and another sort of ugly reminder of what the polarization in politics on both sides of the Atlantic is doing, and the rhetoric's being is heated up. The tension. I mean, we had an attempted assassination in Slovakia back in May of the prime minister. So I think that particularly for far-right leaders in Europe, but frankly, all of the European leaders are sitting here saying this is. This could have happened here, and I think it's just that sort of worrying sign that with the way social media drives some of these, sort of more extreme narratives, the way things get repeated, the way messages are hammered in over and over and over, it really has people worried about what is happening overall to Western democracies and just the kinds of political debates that used to happen, in theory with less violence.
Okay, Bloomberg's Brussels Bureau Chief Kevin Whitelaw on the context around this attempted assassination, of course, with the international perspective as well. Kevin, thank you. Briefly checking back on these markets then, as you're seeing, again, the losses most pronounced around luxury across the benchmark. European stock 600 currently down 0.6%. In France, the CAC current off by 0.7%, a drop of 56 points right now. You have the likes of Kering down, as I'm looking at it, down close to 4%. Let's get a call on these markets then with, of course, the US politics and the momentous events of the weekend tying in to that view. And bringing in Eleanor Taylor-Jolland, fund manager and co-head of Swiss and global equity at Union Bancaire Privée. Eleanor, thank you for joining us this morning. We're seeing a little bit of movement in the Treasury markets. Yields up modestly towards the back end. The dollar is bid up around 0.2% on the Bloomberg Dollar Index. Have you made any adjustments? Would you make any adjustments on the back of the events that we saw over in the US, Pennsylvania, over this weekend?
I think your previous interviewee resumed the situation extremely well, that what happened over the weekend probably confirmed what the markets have been pricing for some time in terms of the US election. And as regards what is happening in Europe this morning, what I find is much more interesting is perhaps that we are being fundamental here on equity markets and looking at the situation in China and looking at the GDP numbers in China. GDP is what influences equity markets, not a political situation. And that is where you're seeing indeed that big hit to luxury, both obviously reinforced by the poor numbers published today by Swatch and by Burberry, but also just a reminder that there is just less disposable income around, it would appear, in China, and what disposable income is there is not being moved towards luxury. This was very much what our thinking was indeed earlier on this year, and we have been cautious on that sector during the year, as we expected that the high base that we would have in the second half of the year would be very difficult for luxury companies. So as fundamental investors, we look at what companies can do in terms of what the economic environment is. And we remember, obviously, that equity markets and the economy in general always likes to have a very stable background politically. They do not like it when the electorate is angry with the people they've chosen to represent them. They do not like violent language. They do like sensible, thoughtful approaches by politicians. And let's hope that the tragic events of this weekend will encourage politicians again towards a more sensible way of expressing themselves.
Okay, on the market need for political stability and, of course, the focus on fundamentals. And you talk about the luxury space, Eleanor, and we'll mark right now, Burberry down close to 10%, down 9.4%, suspending the dividend, of course, and change at the top in terms of a new CEO in a company that has, of course, struggled to adapt to the slower sales out of China. You talk about your caution when it comes to European luxury. Eleanor, what would you need to see to turn more bullish on that European luxury space?
I think we'd first of all need to see a more resilient Chinese consumer for luxury. Remember that luxury has benefited from a new consumer coming out of mainland China over the last decades, one could almost say, and that tide has turned. I'm also somewhat cautious about whether tourism, international tourism in China, is going to pick up in the way that it used to pick up in the past, and also be turned towards that hardware purchasing when Chinese people travel abroad, or whether they may be moving more towards an experiential experience seeking when they travel, as opposed to simply consuming on goods. So these are areas where there's just a shift demographically, which comes with the development of a country, and also perhaps we need to look at whether the luxury good companies themselves are really necessarily offering the kind of value for money that the consumer wishes to have. Are they sufficiently innovative? Are they sufficiently offering something which justifies the big price increases which have been put through in some areas of luxury over the last few years? Luxury is no different from any other company. You need to treat your customer with respect, and that means that you need to price your products at a level where the consumer feels comfortable purchasing your product.
Eleanor, where is the safe haven in Europe? Is it Switzerland? Is it the UK? Where should I be looking if I want to hide out?
It's funny that you should take those two markets. I take no credit for it, but my illustrious employer did indeed decide to promote investing in both Switzerland and in the UK a few months ago. And I would certainly suggest that the greater stability politically in the UK, certainly compared to what we've had in recent history in the UK, is very encouraging. And compared with some other European countries which are going through some moves at the moment, that certainly makes it a more attractive place for investment. Switzerland had its general election last year. Nobody noticed, and that is again typical of Switzerland. It is a country which has a very strong, stable economy, which has a clear understanding between the electorate and the government as to how to run the country. We have ample opportunities to express ourselves with direct democracy, and you can see the results of that with the strong Swiss franc, fortunately weaker, with a central bank which intervenes when it has to weaken the Swiss franc to maintain outwardly looking liberal economy, and which may well benefit on this week from this move perhaps to more caution. When we see healthcare going up, one needs to remember that Switzerland has a 35% exposure to healthcare stocks. So I would definitely see the safe haven nature of Switzerland being attractive once again to investors, and also the quality of the companies which do strive to be very value creative, which have particularly high cash flow returns on investment, similar to what you find in the US, but currently at a more attractive valuation than what you'd have in the US. So we are definitely attracted to the Swiss equity market in difficult political environments and also more fragile economic environments elsewhere.
Okay. One of the things that people have been doing over the last few months is maybe hiding out in high-tech companies. You can talk about the AI trade, but the ability of many portfolio managers to park their money into high-tech stocks and sit on the gains has been quite impressive. There is this idea now that we're going to see a broadening of the market, that small caps are going to bounce, that the rest of the S&P is going to do well. Is that broadly good or bad at an index level, do you think? Because it was interesting Friday to see actually US stocks struggling as this broadening happened.
So how one broadens is perhaps the question one needs to ask. And I think one needs to remember also that broadening is going to take quite some time in view of the concentration that you have on a couple of names currently. So yes, if you look at indices, if you want to consider indices to be a reflection of the economy of a country and the reflection of the economic power of a country, it's better to have a broad index than to have it overly concentrated in a few names. But an index also reflects what's happening. There has been a tremendous amount of, quite well placed, I would argue, optimism about the opportunities around AI. But perhaps so far as we haven't yet seen how exactly AI is going to change or influence or adapt the ways that we interact with each other and become productive. We're seeing that trade be very concentrated on a few names. And that does mean that we need to be quite patient and wait to see how AI really develops and how it does influence us and where exactly the winners in the whole value chain of AI are going to be found. I would prefer to be already positioned into some areas which are already being affected by AI, be it on the side of the people who are helping to provide the enormous amount of energy we need to develop AI more thoroughly, be it in the first users of AI. And that does mean that bit by bit, we are going to see broadening, but with the size of the companies which are exposed to AI first and foremost today, we're going to see that broadening be quite slow and perhaps a little bit lumpy, as it may result in there being less performance on those very large market capitalizations, very big weights in the index, while smaller companies start to perform better. But overall, that means that the index might be under a little bit of pressure. Good argument, actually, for fundamental investing and avoiding indexed products, which may reflect more painfully the switch towards the broadening of the index.
Eleanor, what are you watching out for this week that could be most consequential to stocks? Guy was asking one of our colleagues, Paul Dobson, this earlier. We've got these Trump trades that are no doubt going to be in focus at the start of the week. We've got bank earnings. We've got Powell speaking later today. What do you think is going to be most material?
I would say that earnings should always be first and foremost in the minds of an equity investor. That is really where you're going to see the operational ability of the management of a company, and the rest is noise. And if you are a fundamental investor, you're not thinking about what is going to matter for 1 week. You're planning already what's going to be mattering in the beginning of 2025 and beyond that at this stage in the year. So earnings will be in focus. Obviously, when we have a lot of financial earnings, that's a very good indicator of how the broader economy is also functioning. And then there'll be noise that people who are probably more clever than I am or more short-termist than I am will be able to play with. But we've still got a very long time until we actually have the results in November for the election. So I'd be cautious about thinking that it's a slam dunk at this stage, especially as you've got a lot of noise around that. And certainly when it comes to the rates situation, I think we're all coming to the realization, or have over the last few months, that rates are going that inflation is going to be a lot more sticky, and that does give a little bit less flexibility to Mr. Powell. I would argue that the market is getting comfortable with that situation, and we should, I wouldn't expect there to be an enormous amount of noise or movement around what we might hear from the Fed this week.
Thanks very much, Eleanor. Good to speak to you. Eleanor Taylor-Johnson, fund manager and co-head of Swiss and Global Equity at UBP. Let's go to some of the European names on the move this morning then, Guy.
So some really interesting stories developing. The luxury story absolutely front and centre, I think, for European markets this morning. We've seen the double effect of Swatch and Burberry and the numbers they both delivered having a big impact. And as you can see, LVMH is down this morning. We'll come back to Ferrari maybe in just a moment. Luxury is where the negative story is. It does seem as if maybe the market is hiding out in maybe Novo Nordisk this morning, ASML. So the tech story is still absolutely front and centre. But it's interesting to see Schneider's a little bit soft as well. This is the board that you actually really want to pay attention to for European equities this morning. Look at the bottom. Swatch down by, let's call it circa 10%. Burberry down by circa 10%. The rest of the sector being really quite impacted by what we're seeing from these two companies. Plus, you fold in the China narrative this morning as well, Anna.
Yes, and we've got another couple of, one stock and a sector that we're watching in relation to news flow. Ocado shares in particular weak, halted for volatility, Guy, as you mentioned. We're looking into whether we've seen a broker downgrade on that one. In terms of the wind energy businesses, then, this is where the Trump trade comes into play. And this was a sector, of course, that many of our colleagues were expecting to see some reaction as we start to assess that Trump's chances improve. Ørsted, Vestas, both of these wind players, and seen as having less potential in the United States if we do get a Trump presidency.
In South Korea, you got a move into defense stocks. So you saw that in South Korea on the back of what was happening out of the US. You're seeing a little bit of a modest move in Europe on the back of that narrative, though. It's a bit of a bit mixed picture. Looking at Safran is currently down. But Rheinmetall is getting a bid. Of course, the German manufacturer of arms, supplying many of the European nations there in terms of weaponry, up 0.7%. So we're seeing a little bit of a lift for defense stocks. We can flip the board and have a look at healthcare systems, or healthcare stocks as well, I should say, because there is also that bet that maybe a Trump presidency, again, with the caveat that if it comes to pass, would be less inclined to push hard on regulation. So you're seeing a bit of a lift for some of the healthcare makers. Zealand Pharma at the top of the list across that sector, up 1.3%. Also gains coming through for the likes of Merck and Novonesis, also gaining. Novartis, Roche also posting gains of around 0.3% to around 1% at the top end for Zealand Pharma.
So the Bernstein downgrade on Ocado does seem to be having quite a big effect. Double downgrade, price target cut for 260 versus the 1,000. So massive downgrade coming through from Bernstein on Ocado. I've yet to see the note, but that's the headline coming from it.
Yeah.
And that's
so no surprise there's a big move there then.
Absolutely not. Luxury front and centre though. It's a tough morning. It was going to be a tough morning with the China data already, I think, for the luxury sector.
Yes, and then to get this news out of Burberry and Swatch, as you say, citing China as an area of weakness. It does seem that Burberry, though, has its own problems specific to the business as well as the broader read across. But, you know, with the CEO only in post for 2.5 years, really tried to invent themselves, move up that luxury curve, but not sticking.
Yeah, and the lineup that came through from Ackroyd didn't win as many plaudits as many, arguably, within Burberry would have wanted. So you're right to point out this is partly an idiosyncratic story to Burberry, tied into the broader sector pressure coming through from China. And as we discussed, China doesn't turn around in terms of consumer sentiment until the property crisis is resolved, and we still seem to be a long way from that. So we keep across, of course, what is happening on the Burberry story. Guy, we're going to get more on that after the break. You are a regular visitor to Burberry stores
I've been there once. Tom continues to reference this.
Yeah.
Daniel Lee, I wonder what future he has at the company, given the fact that we've just seen a change in CEO. Does the chief designer, who, as you say, has struggled a little bit maybe to gain traction? Anyway, we'll talk more about this in just a moment. We need to get you up to speed with what's happening here in a little bit more detail. CEO's gone at Burberry. We've got a suspended dividend there. We've got the Swatch story you need to factor in as well. More details to follow in a moment. This is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
This is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back now. Swiss watchmaker Swatch Group's shares are down, taking a big hit in the session, down 10% as things stand after reporting profits plunging 70% amid a China-led slowdown for luxury companies. Let's get more with Bloomberg's Chloe Melly then on the details. Swatch, but also Burberry. We'll start with Swatch then, taking a big hit, and so much of this seems to be down to the China story. Talk us through the numbers.
Yes, so as you said, 70% drop in operating profit, sales plummeted as well. And the thing is, those two profit metrics, the profit and sales, that came significantly below expectations. That was really not something that was anticipated, led by a downturn in China. So the CEO said the company had cut production by more than 20%. And he said that China will remain weak. The Chinese market will remain quite weak until the end of the year. It'll be interesting to see what Richemont does tomorrow in terms of its watches segment as well. The jewelry segment is quite resilient, but maybe it seems like the watches sector in general in China is struggling a little bit.
So not buying watches. Is there a similar story at Burberry, or is this very much more idiosyncratic around what they've been trying to do to move their business sort of up the luxury scale?
Yes, Burberry is a bit more specific to them. So they've been really trying to have this brand revival strategy to become more of a high-end label. And that has really not worked so far. They've changed their CEO and their chief creative officer in the last 2.5 years. And what they've been trying to do has not really, it's not there yet. And there have been reports of jobs potentially being on the line as well, as it's still navigating this turnaround. But we'll have to see about that. But there's some expectation that the second half could be a little bit better. The comparatives will be easier, and a bit more tourism could be quite beneficial. So we'll have to see on that.
Chloe, we'll leave it there. Thank you very much.
Thank you so
indeed.
much.
It's Chloe Melly joining us on what is happening with the luxury sector, which actually in some ways takes us to what we're going to be talking about next, which is tourism.
Consumer spending certainly does, doesn't it?
Precisely. Yeah. You talk to the airlines, summer's going okay, but there are cracks beginning to appear. And there's quite a lot of capacity being put into the market as well. They've been constrained by Airbus and Boeing, but nevertheless, it's going to be a really interesting summer. And I think the winter season is going to be fascinating for these airlines to see how they do through that. Is consumer demand, looking at the luxury sector, starting to fade a little bit?
We will certainly get into a conversation about that then. Coming up, tourists are set to spend a record amount in Europe this year, we understand, as travel demand remains strong. But that comes with its own challenges. We will discuss how airlines are coping with the CEO of Sun Express, a joint venture between Lufthansa and Turkish Airlines. We'll see how much he agrees then with that expectation of strength, as Guy was pointing out some signs of weakness, some cracks appearing in the aviation story. That interview next. This is Bloomberg.
Seeing firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome back. This is the opening trade. 30 minutes into today's session for this Monday morning. And Tom, European equity markets then on the back foot. The Paris market in particular down by 0.8% as it underperforms the luxury sector writ large there.
Yeah, and in those luxury names, it's really the focus on Swatch and Burberry, as we've been discussing. Both of those companies down double digits, down more than 10% right now, both Burberry and Swatch. Swatch with a focus, of course, on China and the softness they're seeing in terms of sales. They're not seeing any rapid turnaround in terms of the demand out of China. Burberry cancelling and suspending its dividend and also changing its CEO, but also facing a challenge in terms of the demand or lack of demand out of China as well. So Burberry and Swatch, the biggest losers across the European space. Ocado also taking a big hit of close to 9% on a downgrade coming through from Bernstein. So we continue to keep across what's happening with Ocado. In terms of the resilience that's coming through, or at least relative resilience across European equities, you're seeing a little bit of strength coming through for the likes of healthcare and defence, and you can tie that maybe to the Trump attempted assassination story and what that means for his chances come November as well. So we keep across those sectors for you. Across the benchmark, European stock 600 currently down 0.4%. But Anna was saying the underperformance coming through from the CAC current over in France, down 0.8%.
Tom, let's kind of draw a line between what is happening in the luxury space and what's happening with the travel space. In many ways, those two sectors very connected. So the summer season is underway, the vacation season in full swing across Europe, and demand for now remains strong. Travellers, however, are facing long delays, flight cancellations. That seems to be a big theme. Airlines are dealing with rising costs. Joining us now is Max Konatsky. He is the CEO of SunExpress. SunExpress is a 50-50 JV, joint venture between Lufthansa and Turkish Airlines. Max, thanks for the time. What does demand look like right now? We're starting to see in other spaces signs of the consumer cracking. Is that starting to show up in demand this summer?
Actually, on our end, not at all. We've seen very strong demand in all markets we've had. SunExpress itself, in terms of the pre-pandemic levels, we've already broken that in 2021 at 101% capacity. Last year, we were already at 146%. This year, we're shooting over 170%. So in terms of, many European mainline carriers being between 90 and 100% capacity to pre-pandemic levels, we've exceeded that very well. For 2024, We're seeing seat capacity increases of over 19%, and we're shooting for 15 million passenger numbers. So we're very happy with the demand we're seeing right now.
Max, can I just talk to you about a sort of related issue, which is very strong demand, but struggling infrastructure, and airlines that are struggling with cost issues as well. Let's deal with the infrastructure issue first of all. How big a problem do we have in Europe with ATC, air traffic control? I have to say, personally, I've just spent the last few days dealing with this, significant delays, cancellations across Europe. Are we underfunding air traffic control? Are we underfunding the infrastructure? Do you think airlines need to pay more?
Well, we've seen cost increases on the ATC side and actually any supplier side to a degree that we can't pass on to the customer. We're looking at low single-digit yield increases compared to our passengers, and we're looking at double-digit cost increases all around our supplier landscape, whether it's ATC, whether it's fees and charges, whether it's other supplier costs. So airlines are sort of stuck in the middle on that one. So definitely a no to increasing fees on that front. We are seeing bottlenecks and congestions actually all around Europe. This is a tendency that all airlines are affected by, and we're working through it. For example, at SunExpress, we have started a mobile sort of emergency SWAT team that is certified to help in all different kinds of airports with different security clearances. We have stepped up our communication efforts, and this is something we have to go through all together to master this summer traffic peak.
Okay, so that's the infrastructure and how it holds up to the summer peak. Thinking about that summer peak and what it starts to look like in the years ahead, Max, I wonder if you could give us some insight into conversations you're having or what customers are saying about rising temperatures in Europe and how that might change travel plans. Clearly, you're painting a picture of resilience. 2024 seats up by more than 19%, you said. But what conversations are going on around how rising temperatures impact if people travel, but perhaps more when they travel?
So we're seeing two things. For the summer peak, it can't seem to be hot enough for our travelers. So again, as you said, 19% seat capacity up. We're seeing that over the last really decades, especially Turkey as one of our key destinations has grown by 10 to 12% every year in the last 30 years and is still rising. The good value for money is actually helping on that front. So we're not seeing any kind of decline in demand for the summer. But what we are seeing is that in terms of just sun and beach, our customer segment is diversifying and expanding, and we're seeing that the shoulder periods in the early spring, but also the late fall, are actually extending. And we're looking at aircraft and crew utilizations of over 90% for the months of October, November. This is a new development, and not sure this is purely driven by the climate developments, but more importantly by, I think, customers really being eager to also get some relaxation time in later in the year.
That's interesting. Max, thinking about your growth plans, obviously that relies on you being able to get hold of the aircraft that you want and the ones you have on order. So you have an order in for 737s, I understand, and yet we've seen delivery delays there. How is that impacting on your expectations?
Yeah, at SunExpress, we have actually two open orders, one for 42 aircraft, and another one for 90, so 132 in total. We're very happy with the aircraft from a technical point of view. We're very unhappy with the, as you mentioned, the delivery delay situation by Boeing, and we are putting quite a bit of pressure and also ample negotiations to step up the accuracy and the delivery timelines. This is something we're in discussions with Boeing. And again, this is something where Boeing really needs to step up its game in terms of getting back to the original delivery timelines. For us as a seasonal carrier, especially pre-summer deliveries are incredibly important. Delaying an aircraft by 6-7 months post-summer is a big hit for us with high costs. And again, this is something that is hard to pass through to the customer. So again, airline as an intermediary is stuck in the middle.
Max, what does that pressure on Boeing look like in a kind of material sense? Is there any adjustment around the contracts that you have with them on these 130 plus aircraft that you've got on order in terms of pricing? Is there anything more material you can do in terms of that pressure? And when do you see deliveries getting back and kind of normalizing? What's that time frame for you?
Well, I think you'll understand that I won't disclose any details in terms of our contractual negotiations with Boeing. But obviously, I think it's, we have out of the 90 aircraft order that we had in last year, we have 45 firm orders, 5 options, and 40 purchase rights. And obviously, that gives us a bit of space to negotiate, turning those into firm orders or not. And that's an area, an angle of attack that we're using.
Do you think you ever get those 737-10 MAX 10s, or you have to kind of effectively, and in reality, kind of write those off?
We have we're not going to write it off, actually, and we desperately need that aircraft because, as you know, the 737 MAX 8, roughly 189 seats to the MAX 10, 230 seats, is something we badly need in terms of the increase in capacity, and we're seeing it with other airlines too, the upgauging that is badly needed. The MAX 10 hasn't been certified yet, so this is a process that's still going on. Boeing is advising that this is going to happen in 2025. Our earliest MAX 10 delivery is in 27, so we feel well prepared in still phasing that in on time.
Max, there is a shortage of aircraft around at the moment. What is happening with Boeing is one issue. If you're an Airbus customer and you've got the Pratt engine, you've got a problem as well. So there are kind of multiple issues that are affecting capacity this summer. Nevertheless, Turkish carriers in particular are putting a lot of capacity into the market. How do you think that's going to work out? Do you think there is too much capacity coming in for Turkish carriers? And how do you think that could ultimately affect your yield levels?
Actually, not at all. Our yields have gone up, again, single digits, instead of the cost increases we're seeing that are in the double-digit range. But as you said, Turkey has had a wonderful growth spur. Actually, not only just the last few years. I mentioned we're operating at over 170% capacity compared to 2019. But if you look back, even for the last 30 years, you're seeing growth rates anywhere between 10 and 12% CAGR over the last 30 years. And this is despite, natural disasters like the earthquake last year, the military coup attempt in 2016. It's a very stable market. The current situation in terms of the economy is also providing a very good value for money and sort of benefit ratio in Turkey, which has made Turkey the #1 leisure destination out of mainland Europe, for example, at the moment. So I'm not concerned about that. Again, it's the sort of meeting demand with the supply available we have.
Okay, final question. We started the conversation talking about demand. You say that demand is very strong and is likely to remain, certainly in the near term. You are a seasonal carrier, mainly focused on the sun. So what happens this winter? What do you think? How sustainable do you think the current demand picture really looks like? I'm starting to see airlines sounding much more cautious about what this winter season is going to look like. Do you think this is the last summer in which we're going to see this level of demand, this level of price elasticity? How much more can we get out of this market, do you think, into next summer, into what happens in 2025?
As I mentioned before, we're doing a couple of different things to counter seasonality. One of the things is that we're extending the summer period. And as I mentioned, we have crew and aircraft utilizations in the 90% plus range in the months of November and October. So it is diversifying the purpose of travel from purely sun and beach to, culinary travel, cultural travel, hiking, nature travel. And that's worked quite well. Golfing tourism, for example, has spiked up, especially from the UK. And so we're seeing a demand that is sort of broadening into spring and also into the fall. So on that note, very, very positive developments. At the same time, we're also taking actions to shed some of the capacity in the wintertime. One example here I'd like to mention is our operation in South Africa. So we have, last winter, we put 2 aircraft into South Africa, operating for South African Airways between Joburg, Cape Town, Durban, Port Elizabeth. And this is being stepped up next winter. So we're doing things on both sides. One, basically increase revenue, counter seasonality, and at the same time, offloading and shedding some of the excess capacity we have in the wintertime.
Max, great to catch up. Thanks for spending the time with us this morning. Really useful update on what is happening. Max Kowalski, CEO of Sun Express, which is JV between Lufthansa and Turkish Airlines. Let's get back and talk about some of the other stories we're watching so carefully this morning. A big week for US bank earnings. We saw, obviously, the story Friday. Today we get Goldman Sachs. It's going to report numbers a little bit later on. We'll have a preview of that. That's going to be important. We're also, of course, going to keep eyes on Milwaukee. President Trump is going to getting ready. Is changing his speech, we understand, to get ready to speak at the Republican National Convention. This obviously following the attempt on his life over the weekend. How does that change the narrative? You're looking at live pictures from the RNC. This is Bloomberg.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977 when by then I had a little research station and 4 of my students were kidnapped and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
Welcome back to the opening trade. Markets increasingly thinking about what's been going on in US politics over the last few days, of course. Last week, we spent a lot of time talking about the Democratic camp. This week, no doubt, the focus on the Republicans with the RNC taking place and what happened over the weekend to former President Trump. Let's think about the wider global context here. World leaders have been quick to condemn political violence and wish Donald Trump a speedy recovery after the shooting of the former president over the weekend. Let's get more on the international response to the attempted assassination from Bloomberg's Oliver Crook, who has those details for us. Ollie, take us through some of the reaction then that we've seen from world leaders.
been a lot of it has been condolences, has been sort of sympathy, but really the overarching messages from most of the leaders across the world is that violence is not the solution to political problems. And this is what we heard from leader after leader, the moments after and the hours after the attempted assassination of Donald Trump. You had Olaf Scholz, for example, out on X saying that the attack on the presidential candidate Donald Trump is despicable. Such acts of violence threaten democracy. Of course, there are certain nations that we look at for a slightly more closely in terms of what their responses was. China, for example, gave a very sort of sober message saying that they expressed their sort of sympathy and their concern around the shooting incident. There have been, of course, some more colorful reactions, say from the Kremlin, where we heard from the spokesman there, Peskov, saying that after numerous attempts to remove candidate Trump from the political arena, using first legal tools of the courts, prosecutors, attempts to publicly discredit, etc., it was obvious to all outside observers that his life was in danger. He did go on to say that Russia does not believe the attempt to eliminate Donald Trump was from the current administration, i.e. from Biden, but you got some of the flavor there from Russia. So, of course, you take that with the grain of salt that you would expect to take a message from Russia from. However, you had some of those sentiments also echoed by other leaders across the world, like Javier Milei, who was basically putting all of the blame on the sort of global leftists and sort of this is their sort of last attempt to sort of clutch to power. You had Nigel Farage over the weekend saying that the way that the liberals, so-called, had been characterizing Trump sort of invite this sort of activity. You had similar comments from Geert Wilders. So really quickly to sort of politicize this. And of course, for global leaders, this is a hugely important moment here. And if you have instability in America, when it is party to two major wars, it is a big deal. But of course, it will also bear on who is sitting across from them at the table come January.
Yeah, and those comments coming from Wilders and Farage and Milei coming before, of course, we have any idea what the motivation was behind this attempted assassination, what the motivation of the shooter actually was. In terms of the broader political context, Ollie, you sit there, of course, in Germany. Germany facing its own far-right threat, some would see, in terms of the AfD. That's how some would characterize it, but also the threat of violence as well. It's not just unique to the US. This is happening in Germany, in other parts of Europe as well.
Yeah, that's right. In Slovakia, of course, the prime minister was shot just 2 months ago. So this is really something that is present in the minds of many democracies across the world. But as you say, Tom, certainly in Germany, where you saw in the lead up to the EU elections, a number of acts of violence on political candidates and organizers throughout Germany. And you see it there on the screen. There were 60,000 last year offenses, politically motivated crimes. That's the highest since they started sort of following this kind of data in this kind of detail since 2001. And that is a mark of almost doubling over the last 10 years, and it's really sort of escalated as well in the wake of the Israel and Hamas conflict. And it's important, Tom, because we also have state elections here in Germany in September across 3 states where the AfD, the AfD, which, as you say, for many mainstream politicians is a source of great concern, is expected to sweep across all of those elections. So that tension is very, very felt here in the atmosphere in Germany.
Okay, that's a remarkable statistic, isn't it? Oliver Crook, thank you very much in Berlin. Just on the numbers out of Germany in terms of political linked violence that we've seen just in that one nation.
Yeah, absolutely. So, Oliver, there with some of the deep dive into Germany, I was taken back to the events pre the Brexit referendum here in the UK, where we saw the murder of Joe Cox, the MP. And at that time, and that came just a week before the vote, and at that time, lots of people said, well, is this going to give energy to the Remain camp? And actually, well, we will never know what the counterfactual would have been, but certainly we didn't see that come to pass. The Remain was not victorious at the polls, 52-48. We voted for Brexit. It just goes to show how unpredictable the impact of these things can be.
It is really hard to predict, and it's also hard to predict how politicians are going to react to this as well. Does this bring the politicians back towards the centre, or does it only entrench the extremes? We're going to find out a little bit later on, maybe with Donald Trump, when he speaks, and we'll see exactly how he navigates this really difficult story from his point of view, from his personal point of view, and from a US political point of view. This is one of the narratives we're going to be watching so carefully this week. It's a big week. We've got the Powell interview coming up a little bit later on with David Rubenstein. We've also got the continuation of bank earnings that we need to factor into our thinking as well. The earnings season absolutely front and centre. Morgan Stanley, Bank of America, Goldman Sachs, all yet to report. Of course, we saw what happened with JP Morgan, Citigroup, Wells on Friday. The big market reaction. We got to some okay numbers from some of those banks, from the mixed numbers from others, but the market generally took it fairly negatively. So does that narrative change this Monday? Jenny Serrain joins us now to discuss. So we've got Goldman Sachs front and centre. The message coming out in terms of investment banking from the others that we've already had, JP Morgan, etc., not that great. What does that tell us about maybe what we should expect from GS?
Yeah, I mean, I think that's exactly right. So it was interesting on Friday because all three of these banks actually posted really strong numbers in investment banking, with debt capital markets being one of the particular areas of strength. But you heard both the CFOs of JP Morgan and Citigroup both saying, you know, this is kind of a weird number for us because in a lot of ways, this was companies looking to get ahead of a big wall of refinancing that's coming up. And so they just pulled forward activity that we were expecting them to do in the second half. And so, while obviously this quarter's number looks great, we're not actually sure that this is going to make it through the end of the year. And so I think that will be the type of flavor that we're looking for from David Solomon and his other executives today. You know, even if they post really good numbers, how permanent do they feel like this is? Are these real green shoots, or is this just kind of a you know, incidental blip and we're kind of back to the doldrums that we've been seeing these past few quarters?
Well, does that apply as well, that prism, to trading activity as well across these banks?
Yeah, it was interesting on Friday. You know, none of them really had kind of standout quarters in trading. The ones where we saw it, like Citigroup, I think their equities numbers looked really good, but it actually had some weird one-time gains. And so I think it wasn't much to kind of call home about in trading this quarter. And really all the focus was on investment banking. Now, again, that is something that a lot of these executives warned isn't going to continue through the second half. And then they also were quick to point out that this is off of a really low base. And so this doldrums that we've been talking about, this deal-making slump, the capital markets just being completely sleepy, you know, that's been the kind of backdrop that they've had. And so we haven't really seen them turn it around quite yet.
It seemed, Jenny, that banks got a boost, didn't they, as central banks were hiking interest rates, and we saw that being passed through. Net interest margins were flattered by that. Some people asking now whether we enter a period where the politics means we get steepeners in bond markets, and some saying that the banks will benefit from that. So we've got the earnings story to factor in, but then we've got that other trajectory to keep an eye on as well.
Yeah, you know, it'll be really interesting because I think for the most part, a lot of them were talking about kind of the end of the heyday of high interest rates for them. And so, yeah, net interest margins, net interest income have both been on a real tear these past few years, really. And we're starting to see that really come to the end. But it'll be interesting because I think, you know, obviously there's still a lot of questions about when the Fed finally does cut rates or how quickly that happens. And so I think for the most part, they're still trying to sop up whatever benefit they can in the meantime.
Okay, Jenny, thanks very much. Bloomberg's Jenny Serrain with the latest on the banking sector. Looking back a little on to Friday's roster of reports and ahead to Goldman Sachs and other earnings. Thinking about the week ahead, we have earnings reports coming, more from the luxury sector, in fact. We've heard from Burberry already this morning, and that didn't go well. That's weighing on the sector, weighing on the CAC 40 as well, which is down by 0.6% this morning. So we'll keep an eye on the earnings. ASML will be reporting middle of the week as well. The UK's King's Speech, that's when the Labour Party sets out its legislative agenda for the year ahead. So that will be an area of focus. And then on Thursday, we'll get to the ECB. We wonder whether that can cut through some of the other dynamics that markets are dealing with right now. And we end with Netflix earnings at the end of the week.
A sort of finale. I've got some sort of joke around Netflix.
Yes.
I'm not entirely sure what it is.
Excellent. Write your own.
Yeah, exactly.
Insert here.
You can binge watch all of it. Let's talk about what we've got coming up, though. This Powell interview, I think, is going to be fascinating. I really do. He's going to be talking to David Rubenstein, peer-to-peer, obviously the Carlyle founder. David has a real kind of rapport with Powell, which I think is going to be fascinating to see kind of how much he gets out of him. But what does Powell say? What does he do at this point? You've had some quite good data. He feels like he wants to be dovish continuously. Does that continue to come out today?
Yeah, is he coming at this with a message? As you say, as you made the point earlier, David's very, very good at asking those questions in a very calm way that extracts sometimes unusual and surprising comments. So we'll see if Jay Powell plays ball. If he comes to this with a message, does he push back on some of the market pricing, currently pricing in a little over 2 additional cuts, or 2 cuts, I should say, by the end of this year?
We spoke to Paul Dobson earlier. I thought you asked him this interesting question about what's going to be the big market story. Is it going to be what Powell has to say? Is it the Trump trades that we're seeing in focus and much talked about today? Or there are all the earnings stories out of the banking sector. He was saying that they might all point in the same direction. So he was leaning very much in the direction of that slightly more dovish Powell that gives a little bit more oxygen to that.
Is Powell's position questionable? I mean, post-November, if Trump wins as well.
Precisely, that's another factor you've got to factor into the thinking. How does that narrative change? TSMC's out with numbers on Friday. Keep an eye on what's happening with the NVIDIA trade as well, when you think about what kind of message it is going to communicate.
And AI and all its forms. That is it for the opening trade this morning. We leave you with equity markets in Europe that are selling off, down by 0.3% on the stock 600. Some real underperformance coming through in Spain. Good weekend for Spanish sport, not good for Spanish stocks this morning, it would seem. The Pulse is up next. This is Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now, context changes everything.
DOJ or other authorities.
We could face bigger challenges next.
Fed was going to keep rate World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Donald Trump arrives in Milwaukee for the Republican National Convention after surviving an assassination attempt. He says he has rewritten his speech to call for unity. President Biden urges an end to the political violence. The dollar gains, treasuries fall. Investors raise bets that Trump will win re-election following the shooting this weekend. Plus, China's economy growth slows. It's the slowest pace in 5 quarters, piling pressure on Beijing to boost support measures. Let's take a look at how this is all being factored into this morning's markets. In some ways, a shrug of the shoulders from European markets. Other factors, other than the politics, having a bigger impact, you could argue. So at the moment, futures in the United States are barely budging. Here, European equity markets are barely budging. The CAC 40 is actually where the real story is. For European equities this morning, the biggest story is actually China and what is happening with the luxury sector, and that is what's being priced in here in Europe. The Spanish market down by 0.6%, despite what was a fantastic weekend for Spanish sport. So let's talk about what's happening across assets. I want to show you the S&P barely budging. It was a fade Friday into the closing bell in the United States. This morning we're picking up a little bit. No real reaction to Trump. Not much of a reaction to the Trump story in the US 10-year yield either. We'll see how that changes. The dollar up barely. The dollar index up by 0.1%. The story out of Europe this morning is China, the slowdown in growth there, plus also a story out of Burberry and a story out of Swatch as well. You can see how that's rippling through into some of the other names. Richemont down by 3.5% this morning. The luxury sector is being affected, but LVMH is down pretty hard as well. So that is what is happening here in Europe. That's the picture. Let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
So Francine is off this morning. Good morning, I'm Guy Johnson. Welcome to The Pulse. We're live from London. We've got a lot going on this morning. You've got to factor in the politics to how you're thinking about what is going to happen next in the United States. Clearly, this weekend's events having a significant effect. One stock that is certainly having an impact, seeing an impact from this week's events is Trump Media. As you can see, that stock pricing in what looks to be a more certain victory come November for the former president. So Donald Trump surviving the assassination attempt this weekend. We are going to see maybe in effect there could be a slower burn, I suspect, than maybe you would have seen, judging by the headlines, you would have anticipated, judging by the headlines. But you could argue, actually, the biggest effect came in this story, actually, after the first debate, when Biden stumbled and people became more convinced of that Donald Trump victory. Anyway, Donald Trump arriving in Milwaukee, the RNC, the Republican National Convention, is about to get underway. We understand that he is rewriting his speech. The big focus now, in so many ways, is on the U.S. Secret Service now facing intense public scrutiny and several investigations. President Biden is urging unity, sort of predictably condemning the violence. We saw that in an Oval Office address last night.
In America, we resolve our differences at the battle box. You know, that's how we do it, at the battle box, not with bullets. The power to change America should always rest in the hands of the people, not in the hands of would-be assassins.
We're joined to discuss all of this by Carlos Encina, senior analyst for the U.S. and transatlantic relations at the Elcano Royal Institute. Also with me here on set, Bloomberg's senior investigations writer, Stephanie Baker. Stephanie, what changed this weekend?
I think everything changed, at least for the near term. You know, as you mentioned, Trump is apparently tearing up his speech. He was planning to attack Biden, and now it looks like he's going to deliver a much more disciplined speech focused on unity. I think he'll probably sound much more presidential than we've heard him sounding recently. I mean, I think it has a huge effect on calls for Biden to step aside because of his age. I think that is going to be put aside for the near future, and I think it impacts fundraising for both campaigns. I think you're going to see an uptick for the Trump campaign in terms of donations. And as we know, there had been a freeze on a lot of donations to the Biden campaign. So I think this looks like a very different campaign.
Carlotta, what is your reaction? What do you think? What is different this Monday morning following what we saw in Pennsylvania?
I think what's different is that the Republican Party is more united than it's been before of the assassination attempt. And even more skeptics are more behind former President Trump. For example, a sign of unity is that Nikki Haley will speak at the Republican National Convention, and she was initially not among the list of speakers. But on the other hand, I think Republicans are still divided on how to respond to this. I mean, on the one hand, for some of them, it is time to tone down their rhetoric, but others want to express anger and outrage, and also wants to point a finger of blame at Democrats and President Biden. So I think right now, I mean, it's true that Trump has a political opportunity to present himself as someone who can rise above the attacks on his life and unite the country. And I think it is important to watch the vice presidential decision that Trump has to make. I mean, if he chooses, for example, somebody like J.D. Vance, who is expressing at this moment anger and outrage, or if he chooses someone else that will try to unite the country. So that decision, I think, is going to be very important and will tell us something about the Trump campaign. And on the Democratic side, I mean, most of them believe that this entire atmosphere of political violence has, of course, begun by Donald Trump, but they are realizing that there is an absolutely new landscape for them.
Carlotta, what is the message? What lessons should Europe learn from what we've just seen in the United States? We see political fragmentation, political extremes in Europe. We watch what happens in the United States. Is that something that we should fear here in Europe as well?
Absolutely. I mean, just remind that last week we were at Washington, D.C. We were at the NATO summit, and the Biden administration was trying to send this message to the allies that the America is strong and that the U.S. leadership is strong. But right now, I mean, the U.S. seems to be the least political stable of all the great powers. And this is coming at a time when the country, the U.S. and also the world face the greatest external threat. So in some way, the country has to find its way back to the stability that a superpower requires. So allies and European allies are very much worried about the political situation and the U.S. and also the rivals. I mean, China, maybe Russia. I'm sure that they want to take advantage of this situation.
Yeah. Stephanie, let's carry on that conversation and that point. Europe feels divided as well. Europe feels like it's going to the extremes. We've just seen what's happening in France. We see it in Italy. We see the right rising. We see huge divergences. You've certainly seen that in France. We've seen political violence in the United States. What is the translation? Can I compare Europe and the United States right now in terms of the extremes that we are seeing?
Well, you know, the ultimate irony is the UK had gone through this period of incredible division and has now come out of it with, you know, a sweeping Labour victory and much less division. Not to say that the divisions in the UK are over by any chance, but, you know, the UK went through that process, and whether or not, you know, we're going to see that happen in France and other parts of Europe where they have to go through this process of dealing with the populist right and realizing that the divisions are so unproductive. I think it's really hard to compare Europe to the United States. I think what's happening in the U.S. is so different. Trump is such a unique character. He's such a unique political figure. And I think this assassination, again, changes him as a political figure.
Yep.
I mean, it feeds into his narrative that he's the victim of political persecution. And I think that, you know, that only reinforces that message, you know, as part of his campaign. And how he navigates that, how he manages that narrative. Can he do it by kind of forging a middle path, not sounding divisive, but using that narrative of political persecution?
Carlotta, let me ask you the final question related to what Stephanie has just said. In some ways, the path forward for Trump seems in some ways straightforward. Maybe he does tack back towards the center. Maybe this is his moment to be able to do that. But that leaves the Democrats in a really difficult position. What did they do? Do they continue with Joe Biden? Do they look for another candidate? How do they tackle that story? If Trump can achieve that, and bringing Nikki Haley back into the fold as well maybe helps with that narrative. What do the Democrats now do? Do they stick with Biden? Do they risk further political chaos by changing riders this close to the election in November?
There are a lot of doubts. I think prominent Democrats believe that the conversation about President Biden and whether he should stay in the race is over. Just think about President Biden staying in the race. I mean, he will have to demonstrate presidential vigor even more. On the other hand, you have Democrats that are concerned about security during this campaign. But let me focus on the voters. I mean, you can hear members of the Congress and political experts, they think that this means that the race is over, and Democrats are worried about this. But when you talk to voters, they don't see clearly that kind of movement in their voting. I mean, it is not that the horse race will significantly shift because the electorate is too polarized. Among the voters, there is a sense more of regret about where the country is, no, and also a real hope for a different conversation. And we saw this even after the presidential debate, that because the numbers didn't move that much. So everybody is exhausted, and they want to see a different campaign among Democrats and among Republicans.
Maybe this weekend is the catalyst for that. Carlotta, thank you very much indeed. Carlotta Encina, Senior Analyst for US and Transatlantic Relations at the Acano Royal Institute. And of course, our ongoing thanks to Bloomberg Senior Investigations writer, get those words out, Stephanie Baker. Coming up, we'll talk about the market reaction. The Trump trade heating up. You're not getting a big market reaction this morning. In some ways, you already got that post the debate. We'll talk more, though, about how markets are reacting to this story and all the other stories we need to factor into our thinking this week. That's next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start Start exploring to see what's moving the markets. Visit Bloomberg.com webinars.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
The Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
One hour, 14 minutes into the equity market session here in Europe, Monday the 15th. We've got a lot to factor into our thinking this morning. Obviously, what happened in Pennsylvania over the weekend, the attempted assassination on Donald Trump, is something you need to be thinking about. But Powell's going to be speaking a little bit later on to David Rubenstein. Think about that. Think about the impact that that could have as well. We're going to have the earnings season continuing. Goldman Sachs is going to be reporting numbers a little bit later on as well. All of this needs to be factored into your thinking this Monday morning, particularly at a time when actually maybe liquidity is beginning to dry up a little bit as the summer season kind of kicks off. Sabitha Subramaniam, partner and chief economist at Saracen & Partners, joins me around the table, as does Bloomberg's Justina Lee. Good morning to you both. Sabitha, let's start with you and think about kind of what happened this weekend and what really in some ways did and didn't change. The Trump trade was already on. The Trump trade was on because of what we saw in the debates and the stumbling Joe Biden in that debate. How did this weekend change, do you think, that narrative?
I think it's just increased the probability of a clean sweep of the Republicans. It's not just that the Republicans take the presidency, but they also take both houses of Congress. And that really gives them enormous power to put forward the agenda. So I think we could now see with greater probability that you have, a very clear agenda from the Republican Party in terms of deregulation, in terms of tariffs, and in terms of just the government deficit trajectory.
So a cautious reaction this morning. Do you think that caution changes, though? Do you think we start to now, as we work our way through, Justina, what's just been described, this potential clean sweep, this policy of immigration that comes to a halt, this policy of tariffs that maybe increases, that changes the inflation narrative, maybe quite significantly, not now, but further down the road? Do you think the market starts to get to grips with the granularity of that now and how it thinks about it?
Yeah, because I think what's interesting is we always see the first reaction in the bond market, and we have seen kind of treasury yields going up, the bond yield curve steepening and the dollar going up, and all of that has been about Trump's kind of fiscal policy and the prospects of more deficits. And I think in the equities market, that feed through tends to be a little bit less direct because there are a lot of factors going on. But if we are talking about the chances, of a Republican sweep, then maybe we can start talking about, stocks that are maybe more regulation sensitive, right? Or, like the renewable energy sector or electric vehicles, like all these sectors that have received a lot of support under the Biden administration. Like, will we start to see a reaction in that part of the market as well?
Let's talk about the tariffs in a little bit more detail. If we do see a government that comes in that is more aggressive than the Biden administration, which is already fairly aggressive on the tariff story around China and elsewhere, is that inflationary? If we are going to see a tighter immigration policy, is that going to be inflationary? Does a tighter immigration policy also maybe detract from the growth narrative that we've seen in the United States, which has felt like it has been in some ways driven by the immigration narrative as well? Kind of process all of that for me, build that into the model for me.
So I think one cannot really divorce the tariff decisions from the fact that the U.S. government is now running a deficit that is just really unsustainable. I think if you look into the next 10 years, the deficit in the U.S. is roughly 6% of GDP. Now, tariffs are one way to pay for the deficit, and I think there is very little room for maneuver in terms of the tariffs. If Trump's Tax Cut and Jobs Act, of 2017 do not expire, then the bill for the US government is about $4.7 trillion, and they have to pay for this. This means that the deficit is actually going to be higher than even 6% that the CBO currently projects. So if you go back and look at the tariffs, yes, 10% of, 10% universal tariff on all imports, 60% on China. Even if they do this, you have, it is inflationary. There'll be some offset in terms of the dollar rising, but there's also, it's not going to fully pay for the spending that's coming through. And if you add on to that additional defense spending that the US has now committed to, it's going to be a very challenging sort of outlook in terms of just public finances and inflation.
Can't we just get rid of the Inflation Reduction Act? Isn't that the way you just solve some of this problem? Isn't that going to be something that the Trump administration is going to be very keen to deal with early on?
Yes, so you could sort of sunset some of the provisions in the Inflation Reduction Act. It just does not pay for the full scale of what's coming through in terms of the, Tax Cut and Jobs Act of 2017. $4.7 trillion is a large amount of money that they have to find somewhere. And, even if you just sunset some of the provisions, they can't actually offset all of them because some of them are just tax credits that are just not going to go away. Some of it has already come into play. So I don't think they can actually, get rid of the IRA.
Okay. How do we think about a Fed in a Trump era? How do we think about the relationship between Jay Powell and Donald Trump? How do we think about the Fed's ability to continue to cut rates were it to start in September as the market currently is pricing?
Yeah, it's interesting because the Fed really is at a crossroad now because if anything, last week's data made everyone sure that we're going to get that rate cut in September. Now, of course, the Fed is meant to be, apolitical, and they will definitely kind of be thinking about that. But if it is pretty clear that, we are going to get a Trump presidency and that's going to be inflationary, we have started hearing market strategists wondering if that will somehow kind of factor its way into the Fed's calculation.
What do you think about that? The market's currently pricing in two. We get 2 rate cuts this year. You then get Donald Trump elected. What does the Fed then do? Can it carry on? Can it deliver some of the rate cuts we were anticipating this year, next year? Is this a two-and-done rate cycle? What do we think about the kind of the trajectory for the Fed and where it's ultimately going?
I think the Fed's in a bind. It has to set out a clear path and then carry it through. So what it sees right now is a labor market that's weakening. That's great as far as the Fed's concerned because the jobs market is taking the pressure off wages. We saw with the inflation data that housing market is starting to cool and rental inflation is coming down. So we have a material catch down in shelter inflation. And so that'll help the Fed. I think the Fed will seek to remain apolitical. And I think our view is that they just basically go for one rate cut every quarter predictably, and they set out their path very clearly so they're not hijacked by political events, that come into play. The economy is starting to cool. The U.S. is growing slightly below trend. If you factor into take into account the immigration you've talked about, that really just means that in the short term, the U.S. potential is actually higher than 2%. It's somewhere around 2.25%. So even if the U.S. is growing somewhere between 1.5% to 2%, it's cooling the labor market, pulling down wages, and this really helps the Fed in terms of just setting out its course. Jay Powell has done a great job. And I think, he needs to just see it through.
Tabitha, thanks very much indeed for stopping by to see us. Thank you very much indeed. Tabitha Subramanian from Saracen & Partners. And, of course, our thanks to Bloomberg's Justina Lee. Coming up, a slowdown for the Chinese economy piles pressure on Xi Jinping as the ruling Communist Party in China meets this week to determine its policy direction for the next 5 years. The plenum kicks off today. We'll talk about it next. This is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Let's talk about what's happening in China. The latest data out of the country shows GDP growth weakening little more than expected. We're now at 4.7% in the second quarter. Let's bring in Bloomberg's Jill Desis to talk about what we should be taking away from these numbers. What should we be taking away from these numbers? What really stands out, Jill?
Really, it's those retail sales figures that are dragging down these overall GDP numbers and I think causing a lot of concern about the trajectory of China's economy right now. I mean, rising 2% year on year in the month, it's really just not a very good sign for the state of domestic demand. We know that this has been under continuous challenge because of issues within the property sector in particular, but it does seem like recent government efforts to try to revitalize that sector, try to pull it out of its crisis, aren't really doing the job. Meanwhile, while you've seen these increases in industrial production that look pretty solid, that's an industry that's really been kind of holding up the Chinese economy this year. There's a lot of uncertainties there about what happens with trade, if there are new trade barriers that are erected around China, particularly from the U.S. and Europe. So that continues to be a concern going into the end of the year, particularly because it seems like another Trump administration, which is, Trump has promised to enact more tariffs, is, very difficult. So it's just a really difficult point for the economy to kind of deal with right now.
Jill Desis, thank you very much indeed. Bit of information you may be interested in. US 30-year yield rising above the 2-year for the first time since January. Part of the Trump effect. We'll talk about the Trump effect next after what we saw this weekend. That story is coming up. We'll have the latest for you. This is Bloomberg.
Names in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
Especially I'm afraid of whenever it's some kind of AI is speaking for me. I want to be myself.
And I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Monday the 15th, welcome to The Pulse. I'm Guy Johnson in for Francine Lacroix. Let's talk about your top stories this morning. Donald Trump arriving in Milwaukee for the Republican National Convention. This, of course, after surviving an assassination attempt. He says that he has rewritten his speech to call for unity. President Biden urging an end to political violence. The 30-year in the United States rising above the 2-year for the first time since January as investors raise bets that Donald Trump will win re-election following the shooting. Plus, China's economy grows at its slowest pace in 5 quarters, piling pressure on Beijing to boost support measures. Let's talk about our top story this morning in a little bit more detail. President Biden has appealed for unity after the attempted assassination of the former president, Donald Trump, this weekend.
Well, we may disagree. We are not enemies. We're neighbors. We're friends, co-workers, citizens, and most importantly, we are fellow Americans. We must stand together. Yesterday's shooting at Donald Trump's rally in Pennsylvania calls on all of us to take a step back. Take stock of where we are, how we go forward from here.
Understandably, the international condemnation of the attack has been swift and strong, with world leaders calling for an end to political violence. Let's get more on this story. Let's bring in Bloomberg's Kevin Whitelaw and Bloomberg's Ollie Crook. Kevin, first of all, let's deal with the story out of the United States. Political violence is not new. We've become more and more accustomed to it recently. This felt like a huge security failure, though. A former president nearly assassinated, an incident that would have caused a huge, huge impact on U.S. politics. Talk to me about kind of how America decompresses from this, where the fingers are going to be pointed, and how we recover from it.
Well, already the Secret Service is facing a number of questions about how exactly someone was able to get onto a rooftop that had a clear view of the stage, and within a range to be able to fire shots like that. So that's going to be something that is going to be federal investigations with multiple agencies involved. But you're also hearing calls for Congress and others to do their own independent investigations. And of course, like any incident, it's also already it immediately spawned a whole set of conspiracy theories. And so it's going to take a lot of time and effort to comb through exactly where the breakdown was. But even more urgently, but all of these federal agencies are going to have to figure out how to make sure that they have stepped up protection for both candidates as the Republicans go into their convention this week and the Democrats next month.
Ollie, condemnation of the attack, understandable, and we've seen it from a number of leaders across Europe and across the world. Nevertheless, political extremes are becoming more normal on both sides of the Atlantic, and you do wonder what the message from this attack we saw this weekend is for Europe.
Yeah, and listen, we're going to see this trickle through over the days to come. I don't think it's worked itself anywhere near the system in the United States, much less on the global stage. But overall, the sort of leaders across the world, their sort of message has been one of, condolence, of sympathy, but really that violence is never the solution to a political problem. We heard from a number of leaders, including Olaf Scholz here in Germany, saying that the attack was despicable, that it threatens, the democracy. We look for some of the reactions from some of the countries that we have particular interest in. We look at China. They gave a very sort of terse but very sort of sober message, saying that they express concern and sympathy for Donald Trump. For a slightly more colorful reaction, we look to the Kremlin, where we heard from the spokesman there saying that after numerous attempts to remove candidate Trump, he says, from the political arena using first legal tools, the courts, prosecutors, etc., it was obvious to all outside observers that his life was in danger. We should say that he went on to say that Russia does not believe that the attempt to eliminate Trump was organized by the current authorities, i.e. Biden, but he was saying that basically the political atmosphere is what has sort of caused this. And it's not just something we heard from Russia, which we take, of course, with a fairly large grain of salt. It's a message that we heard from Nigel Farage over the weekend, who is saying that the narrative that has been put there about Trump by these liberals that oppose him is so nasty, unpleasant, that I think it almost, he says, almost encourages this type of behavior. We heard similar things from Javier Milei, from Geert Wilders. So this is still working itself through, but already very quickly politicized before we even have any clear motive for what this shooting was. For these leaders, of course, they are going to be watching that very closely. They need stability from the United States, particularly when it is a protagonist in two major wars. But of course, Guy, this will bear massively, likely, we won't know for a few days, on who is going to be sitting across the table from them come January after this election.
Kevin, it's going to be fascinating to watch how this does change the center of gravity in America. Ollie's talking about kind of how we should watch what is happening here and the impact it could have elsewhere. The most immediate effect potentially could be felt this evening, with Donald Trump potentially tacking back to the center ground, maybe distancing himself from the extremes. How big an effect could this have on politics? The kind of the center of gravity of politics. Are both sides going to tack back to the center, and ultimately, is that what maybe voters want?
I mean, it's almost certainly what a lot of voters want. I do think, if anything, it constrains President Biden a little bit. President Biden had been in the process of mounting some very withering attacks on Donald Trump as he tried to bounce back from that disastrous debate performance. And now he's going to have to modulate those words and be a little more careful to make sure it doesn't sound like he's trying to somehow pile on to those attacks. For Donald Trump, he's got the same choice. He can either tack toward the center, but you've seen, obviously, particularly from some of his backers, some very strong rhetoric, even in the wake of the assassination, accusations of somehow some kind of involvement from even the White House. And so I do think that the extreme rhetoric on both sides is going to continue despite this. That's only, but the two men at the top of each ticket could set a somewhat different tone.
Ollie, what is the Trump trade for Europe now? How does Europe manage this process? If Trump becomes more likely, how is Europe prepared? How should Europe prepare? And how far along in that preparation process do you think we really are?
Well, Guy, I mean, it's a major concern, obviously, for Europe and for really every nation on the planet, because, what the U.S. does is of huge consequence everywhere. But I'll just take you back to just 2 weeks ago when I was in Kyiv and we spoke with President Zelensky and asking him, do you know what Donald Trump means when he says, well, I'll have this war ended in 24 hours? And Zelensky said, basically, no, I don't have any idea, and I would like to know, because I cannot, as the leader of Ukraine, have any surprises going into the calculus. I think that with Donald Trump come a great number of surprises that a lot of people and a lot of leaders are trying to parse and understand. The peace plan, if we believe Putin as well, who spoke just a few days ago, saying that he also has no idea what's in there. So I think it comes with a great deal of wild cards, Guy, and I think that so much of the Trump sort of administration comes down to sort of some of the impalpable things of kind of rhetoric and kind of feelings within the United States rather than policy. I think that, we're just beginning the process of seeing how this works its way through. And of course, Guy, it distracts from the main U.S. political discussion going into the weekend, which is, will Biden be the candidate?
Yep, and I don't know we have the answer or any closer to the answer after this weekend. Kevin Whitelaw, Ollie Crook, thank you very much indeed. Some parallels, as we've just been discussing, drawn between what is happening in Washington, what's happening in Pennsylvania, and what is happening in Paris, in other parts of Europe. Right-wing politicians coming to the forefront. What we saw in the French election, obviously, the extremes were front and center. And in some ways, we avoided one but got the other. We don't know yet what the next French government is going to look like. The new Popular Front, the left-wing coalition, the one most seats in France's snap election, struggling to figure out how it is going to unite, to come up with a candidate for Prime Minister. Let's get some idea of what happens next and what goes on in France over the next few days. Arthur Delaporte, a socialist member of the French Parliament, joins us now. Thank you very much indeed, Mr. Delaporte, for joining us. How far away are we from getting a new French president? A new French Prime Minister?
We are working out on a name all together to have a kind of real prime minister who will be able to make large majorities in the parliament, because, as you mentioned, we don't have the total majority. We have only a relative majority with around 180 or 190 MPs. So we have to build then coalitions, and we are working on a name who will be able to reunite the parliament, and we are still discussing today.
What names do you think should be put forward? What do you think? Who are the front runners in your mind?
We, the socialists, put the name of Olivier Faure, who is the leader of the Socialist Party, but some other put another name this weekend, but it wasn't a consensual name, so we are still trying to find someone, the good person.
Hollande, Faure, these are names that I'm hearing being mentioned as well. What do you think about those names?
No, it's not probable that it could be a name of François Hollande, for instance, because he's not able to unite the new Popular Front, and the first goal for us is to have someone who reunifies the left-wing coalition, so the new Popular Front, and then someone who is able to build coalition inside the parliament with the center, for instance, and the Macronists to make the bill pass.
Okay, so Macron said he won't work with the far left. What do the socialists do? Which way do you look? Do you look left or right? Do you tack back to the centre? How do you think about what the debate is going to look like within your party about kind of which side do you pick?
Today, we are trying to make a coalition with the left, but tomorrow we will have to work with the center and with the right in parliament, because if we don't do this, we will have difficulties to pass bills inside the parliament.
What do you think the lesson is from elsewhere in Europe? The Germans are really struggling with a broad coalition. Do you think a broad coalition could work in France?
No, I don't think we have the culture of broad coalition. And today, if the socialists, for instance, make an alliance with the center, we don't have a majority. So we would have to make a coalition with the right. But today, the French right is not a liberal right; it's an extremist right. Plus, not far from the extreme. So it's impossible for us to make a kind of broad coalition with the center and the right. So we still have, for first step, to make a coalition, to consolidate our coalition, the new Popular Front, which is with the ecologists, with communists, and with La France Insoumise. And then, when we have a prime minister, then to build a larger coalition inside the parliament.
Should we assume that the pension reform that France has struggled with is now dead, that is over? How central is that to your thinking?
I think that the pension reform was one of the biggest measures we were putting out, and this is one of what we will try to do when we'll be in office. But we will still have to make a majority on the abolition of the pension reform, which was really unpopular. And so this is one of the difficulties we will be facing with in the next few months. But first of all, we have to win the power. And to win the power, to be in office, we have to be appointed by Macron, and then not to have, we say, motion de censure, which is a way to make the government full.
This is a financial program. This is a financial network. People who are watching this are watching France and trying to figure out how the maths is going to work in terms of the spending of the next French government. What assurances can you give financial markets that you will not tear up the spending plans, that you will not spend too much, that you will not cause a fiscal crisis?
The first thing to know is that this is our program, but we have to make a majority in the parliament. So it won't be the program which will be put in final, because we need to build majorities. So maybe it will be a bit different, but the biggest goals are the same. Hiring wages and hiring the minimum wage is one of the first steps we have to do, and the pension reform, I would say, is the other one to be put in first. And to finance this, we will do a tax on super profits and increase the solidarity tax on wealth, which will bring maybe around 30 billion euros. But our aim is to have solid public finance, and we are not irresponsible guys who are wanting just the power for the power. We socialists ran the country during between 2012 and 2017, and we improved the stability of the public finance. So we are not irresponsible leaders.
On that note, we will leave it. Arthur, thank you very much indeed. Arthur Delaporte, Socialist member of the French Parliament, we really appreciate your time. We'll look forward to developments in France. Coming up, talking of France, European luxury stocks under significant pressure today. We've seen disappointing updates from Swatch and Burberry. There's a ripple effect off both of those two into names like Richemont and LVMH. We'll talk about the sector next. This is Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
So, good morning. The story in equity markets this morning in Europe is not about how to price in what we saw over the weekend in the United States and the attempted assassination on Donald Trump. It's this. It's what is happening with the luxury space. So we've had a profit miss from Swatch, and we've had a huge change at Burberry. Burberry's down by 15%, and this follows a really tough year already. Swatch is down by 11%. It missed numbers. That's a China story. But Burberry is changing the leader. We've got a new CEO. Ackroyd is stepping down. Schliemann is coming in. What other changes are we going to be seeing flowing from that? The dividend has been suspended. This is a huge shift for Burberry. So let's bring in Bloomberg's Chloe Melly to talk about what is going on here. Look, this follows a really difficult period. Jonathan Ackroyd has been in for 2.5 years. It hasn't worked. Why hasn't it worked? Why are we where we are now?
Well, there are two types of challenges really that is facing Burberry. So the first one is that it's quite company specific in terms of them trying to have this brand revival strategy, this brand turnaround, becoming a high-end label. That's a strategy that now they're walking back from, and they want to target kind of less wealthy customers now. And then in terms of the market-wide issues, there is the demand is sluggish across the luxury sector, and it's also a particularly difficult quarter this quarter because the comparatives from a year earlier are quite tough. Last year, for the same period, China was reopening after COVID. Yeah. That was really boosting growth for all the luxury sector. Now, obviously, that has faltered, and we don't see that anymore. So Burberry is very much facing those specific issues, and then also the wider market downturn.
So you can understand why the stock is down. The dividend suspension is obviously hugely significant. But normally when you get these kinds of changes, the market goes, okay, so we're bottoming out here, and we can start to improve from here. Maybe we get a kitchen sinking in the next quarter from the new CEO who comes in and kind of tells it as it is and kind of gives a clearer picture. But nevertheless, that's a big reaction from the market. Is the bottom in sight for Burberry?
Well, the recovery, I mean, Burberry said that if the situation continues, it will report a loss for the first 6 months of the year and report full-year profit below expectations. The chairman also said the luxury market was much more challenging than expected. So there's not that much optimism. No. And there's also been some media reports about jobs potentially being on the line as well. So it's not super optimistic. There are some expectations that the second half might be a little bit better with tourism recovering and then also comparatives being a bit easier. So we'll have to see.
We certainly shall. Be interested to see kind of what they do on the designer fronts. Chloe Mellor joining us on what is happening with Burberry. Swatch down pretty hard today, circa 10%, but Burberry's down by 15%. Big down day for the luxury sector. Coming up, Bloomberg understands that Alphabet is looking to make its biggest ever acquisition, which is fascinating. It's in the cybersecurity space. Details to follow. This is Bloomberg.